guys, it's Stock Curry, and in today's video I'm going to let you know what happened on NIO Day, as well as give you my price prediction for this week, and I'm going to tell you what you can do right now to start preparing for success in 2022, even if we enter a bear market. So let's get into it! Okay, I'm going to get into the stock picks and the individual price predictions in just a moment, but for right now I want to talk about the market overall and just tell you a little bit about where I see this week going and how you can prepare for 2022. Now, right now, this week, this second to last week in December, is generally what is called a Santa rally, meaning historically we see a major green week this week in December. However, this week we also have the Omicron and other fears and concerns about coming inflation and tapering and all this stuff that is causing a lot of downward pressure on the stock market that we don't normally get in the stock market in a normal bull run year. And so even though this week is normally a Santa rally, and even though this week is normally really green in December, it's normally the greenest week in December, and December is normally one of the greenest months of the year, this week could end up being negative. We're just going to have to wait and see. Now, I do want to let you know that it's a shortened week this week. The markets are closed on Friday for Christmas, so the markets are only going to be open Monday through Thursday. So it's only a 4-day trading week. So just keep that in mind as you're going through and trading this week, especially if you're trading options. Keep in mind that the markets are closed on Friday. So if you are day trading, you don't want to hold anything over the weekend, make sure you close everything out on Thursday because the markets are closed on Friday. Okay. Now, regarding a little bit longer term, let's get into 2022. 2022 is going to test a lot of people. It's going to be really difficult for you. I would not be surprised if a lot of people lose money next year. I would not be surprised if my long-term investments lose money. I'm just going to tell you that straight up. Now, if we enter a bear market, and there's a lot of signs that that's going to happen, especially with the Fed tapering, but more importantly, with the Fed raising interest rates. That could trigger a bear market. Now, I do have to explain something real fast, is that economically, the United States is actually getting worse off right now. Yes, jobs are doing great, but there are a lot of big warning flags on the horizon, and the major warning flag we see on the horizon really deals with inflation. Inflation is this circular snowball effect that, if it's not put into check, will get much worse. And the general reason is, as prices go up, employees need to make more money because the cost of goods goes up. And as employers start paying employees more in order to attract people and keep people from leaving, they have to raise prices in order to pay their employees more. And as employers raise prices, that in turn causes more inflation. And as that causes more inflation, that causes employers to have to raise prices in order to meet the demands of their employees. And as employers have to raise prices, that causes more inflation. And it's this big snowball effect. And it can very quickly turn into hyperinflation if it's not put into check. That's what we saw in Venezuela. That's what we're seeing right now in Turkey. And it will happen in the United States if the Fed doesn't jump on board and start doing something. So that's why the Fed right now is looking very heavily at speeding up their tapering, which they've already said they're going to do, and raising interest rates next year. Now, they're well expected to raise interest rates 3 times next year, but if they can't get inflation under control, they're going to have to raise interest rates even more than that. And the effect of rising interest rates and tapering to a smaller effect, but it's all the same thing. The general effect of rising interest rates is a lot of different things in the economy, but I'm going to shorten it, make it real simple for you. So first of all, inflation right now is running about 7%. So if you keep cash in the bank account, you're losing money because the value of that cash is dwindling by 7% per year. So imagine if you put $10,000 in the bank account, and a year from now you had $9,300. That's basically what it's like. So the problem is you don't want to keep cash in the bank because you're going to lose the value of it to inflation. You don't want to put it in the bond market because most bonds are paying 1 to 2% interest. So again, you're going to lose value to inflation. So the only place to really put it is the stock market. So that's why we've seen the stock market just rise and rise and rise and rise and rise to these insane PE ratios that we haven't seen since 1999, right before the dot-com bubble. And it's all because inflation's running high and people need to get money in the stock market in order to beat inflation. Now, here's the problem. As the Fed starts to raise interest rates, everything's going to change. Hey guys, I just wanted to interrupt this video real fast and let you know that instead of placing ads in the video, I've decided to do a quick shout out for Webull. If you are not currently signed up for Webull, you have 3 days left to sign up and get 5 free stocks worth up to $8,300. If you want to take advantage of that, all you have to do is sign up using my link below. You just have to deposit $1 using my link below, and Webull will give you 5 free stocks worth up to $8,300. Again, it ends in 3 days. You have 3 days left to take advantage of that. If you're not familiar with Webull, it's a trading platform available in the United States that allows you to trade all the US listed stocks, including everything on the NASDAQ, New York Stock Exchange, and Amex. They offer cryptocurrency trading with a ton of popular cryptocurrencies, including Dogecoin, Shiba Inu, Mana, and a bunch of others. And of course, they have options trading with multi-leg options, and they just make everything incredibly easy. They have by far the best phone app available. So again, you've only got 3 days left to sign up for Webull using my link in the description below. Deposit $1 and get 5 free stocks worth up to $8,300. So sign up using my link in the description below right now and deposit $1 before this offer ends. All right, let's get back to the video. As the Fed starts to raise interest rates, everything's going to change. As interest rates go up, there's going to be less liquidity in the markets because less people are going to be using margin because margin's going to get more expensive. Then the bond rates are going to go up. It's no longer going to be 1 or 2%. It's going to get up around 3, 4, 5%. And at that point, bonds are going to become more lucrative. People are going to pull money out of the stock market and they're going to go put it into bonds. And what the effect of that is going to be is that the stock market prices and valuations are all going to come down because money is being pulled out of the stock market into the bond market. So stock prices all come down. And that's where we get the bear market that I'm expecting. Now, take that a step further. High interest rates are also going to affect the real estate market. You know, real estate prices are sky high right now. It's a combination of a lack of lumber, which, by the way, lumber prices are getting back to new all-time highs. And so that's just another sign that December's inflation numbers, when they come out at the beginning of January, could end up being the highest ever since the 1980s anyway. So that's just not more, bad news. Anyway, the real estate is going to cut down. Keep in mind that during the 1980s, last time we had really high inflation and the Fed just went all out with high interest rates to tackle it, the interest rates on a mortgage were over 20%. I mean, you look at interest rate now, it's like 3.5%. Can you imagine a mortgage interest rate being over 20%? Guys, it could come. It happened before, it could happen again. So the effect on real estate is that we can see a bear market in real estate where housing prices start coming down rather than just continuing sky high like they've been. So as the Fed raises interest rates, the whole point of it is to stop inflation. And so, well, not stop it, but greatly slow it down, get it back under control. And the 2 biggest areas where we see the highest rises are in the stock market and the real estate market. And so those are the 2 things that are going to come down the most when interest rates start going up. So be prepared for that. So what does that mean for your long-term stocks? More than likely, you're going to lose money in 2022 on your long-term investments. Okay, fine. The next thing you might be thinking is, well, should I sell everything and just get out and get back in 2023 or 2024 when it's all over? And I would tell you, I don't think that's a good idea. It's not something I would do. And here's why. First of all, it's almost impossible to time the market, meaning we don't know when a bear market could start. It could start in February when the Fed ends their quantitative easing, their tapering. It could start in maybe May when they do their first interest rate rise. We don't know when the bear market's going to start. There's just no telling. I mean, it could start now. Like the Omicron could kick it off. We don't know. And so the problem is, since you never know when the top is and when the bottom is, it's really, really difficult to time it. So more than likely, if you try to sell your stocks at the top, you're never going to time the top. You're going to miss out on a bunch of gains. And if you try to rebuy the bottom, you're never going to time the bottom, and you're probably going to buy in or it's just going to keep going down. So it's really, really hard to perfectly time the market. The other problem is, once you sell, you now have triggered a capital gains event, and you're going to have to pay taxes. So even if you're on the long-term capital gains and you're paying 10% taxes, that means that your stocks now have to drop by more than 10% to make it work at it. right? We don't know if stocks are going to drop by more than 10%, at least not the stocks you're personally holding. And so the problem is, if you sell, one thing you do know is you're going to have to pay taxes. 10% if it's long-term, a lot more if it's just short-term. But let's just talk about long-term portfolios here for a second. If you sell, it is guaranteed you're going to have to pay 10% taxes on your gains. So right off the bat, it's a guaranteed 10% loss. So you can't really sell unless you know beyond a shadow of a doubt that you're going to be able to buy back in at more than a 10% discount. And if you don't know that beyond a shadow of a doubt, it's a lot of risk to go out there and sell and pay those taxes when you don't know for sure that you're going to be able to buy in for more than a 10% discount. So that's why I'm not selling any of my long-term investments. Now that said, I'm probably going to do some portfolio rebalancing. I do rebalance my long-term portfolio from time to time. So in that sense, I'll be selling, but I'm going to use that cash to buy other stocks. I'm not just going to sell and hold cash. I don't want to lose money to inflation, right? I mean, think about it. If you pay 10% capital gains, and then your cash goes down by 7% due to inflation, now you have to make up 17%. You got to be able to rebuy those long-term stocks at 17% lower than where they are right now. And that's really, really hard to do. So what I am going to be doing is I'm going to be doing some rebalancing my portfolio. And I'm going to rebalance my long-term portfolio starting in January because I don't want to pay taxes this year. I'm going to wait and do all this in January. But I'm going to be loading up on banking stocks, consumer goods. So banking stocks, we're talking Goldman Sachs, Citigroup, Bank of America, JP Morgan Chase, stocks like that. Consumer goods, companies like Kraft, Reynolds, stocks like that. I'm going to look into the pharmaceuticals, but I'm not sure if I'm actually going to buy into those or not because they've already run up a lot with just the pandemic and all the expectations of the vaccines and all this stuff. So I'm not really sure I'm going to be buying into pharmaceuticals. Normally I would because they normally do very well during a bear market because people are going to buy their prescription drugs no matter how much they cost. But this year I'm not so sure I will just because of how much they've already run up. A lot of stocks I'm going to be getting out of on long-term portfolios are going to be tech stocks like Apple and Amazon and Microsoft, my EVs, Tesla, NIO. I'm going to be getting rid of a lot of those because those are the ones that are most likely to go down. Those are the ones that already have insane PE ratios of 30 or higher, in some cases 150. And I don't want to hold on to those during a bear market because those are the ones that are going to crash the hardest. I want to get in the banking stocks with PE ratios of 7 and 6. I want to get into consumer goods stocks with PE ratios below 10. I'm trying to get into the stocks that are undervalued. And so that brings me into my next point is you've got to be very unemotional during this time. You got to remove all emotions from the market. Now, yes, we're still going to be trading. I'm still going to take 10% of my portfolio and do those day trades and do those swing trades and make money that way. But in the long term, you got to remove all the emotion. You got to remove the hype around all the EVs and all this other stuff. And you've just got to get back down to the nitty gritty and focus on the fundamentals. Go look at the PE ratios. Okay, I'm going to do a video on PE ratios. I think a lot of people don't really understand the importance of a PE ratio. In my mind, it's the most important number in the financials of any number. And so I'm going to kind of explain why that is and why you really want to be finding the stocks that are below a PE of 10 if we enter into a bear market. But I'll produce that video a little bit later, probably January. So for now, just focus on the fact that you got to get rid of all your emotions and just focus on those really cheap value stocks to hold on through a bear market. Okay, the next thing that you might be wondering is, are we actually going to get a bear market or is this all for nothing? Well, nobody knows. But I will tell you that historically, when the Fed raises interest rates, we get a bear market. I will also tell you that looking at a lot of other economic things that are happening right now, and I'm not an economist, so I'm not going to get into all of it, but you can certainly go watch. There's a lot of really, really smart people on YouTube that can explain all the problems with the economy right now. The big problem is there are some economists, there's some really smart people that are actually predicting not a bear market, they're predicting a depression. We haven't had a depression in this country since the 1930s, okay? They are predicting a depression. So their thought, generally, I'll just wrap it up, is that they think the Fed isn't going to act fast enough. They think the Fed isn't going to be aggressive enough. and they think the Fed is going to allow this hyperinflation to take place, which is going to ultimately lead to a depression. Now, I don't personally buy into that. I think the Fed, now that Jerome Powell has been reelected, he knows the seat is safe. I think the Fed is going to jump in, they're going to go hard, they're going to go aggressive, and they're going to get this inflation under control. I also believe that since we have Democrats in power right now, that if we do start to get to a point where it looks like we're entering a depression, that the Democrats will jump in and just start printing more money, and they're just going to prove a whole bunch of, new fake money. So I think that right now, with the politicians we have in place, they're going to prevent any sort of depression. I don't think we're going to get that far, but I do think we will get a bear market. Now, keep in mind that I could be wrong. There are a lot of really smart people like Cathie Woods that actually think we're going to go on a new bull run and we're going to see deflation instead of inflation. So who knows? But I'm more in the market of, hey, I think we're going to hit a bear market. Let's start preparing right now. Now, the other thing that I want to say before we get into the individual stock picks is when we get into 2022 and beyond, next year especially, you're probably going to get hurt. And you're probably going to lose money, at least in your long-term investments. So the one thing I do want to say is this: don't give up. Next year, a lot of people watching this video, you yourself, may think, I'm just done. I can't handle it anymore. I'm losing money. I give up. I can't make any money in the stock market. It's over. The reason I say that is we saw a lot of people jump out of the market in March of 2020 and March of 2020, you know what I'm saying, never return. We also saw a lot of people jump out at March of this year. When all the stocks that ran up in January, February dropped in March, a lot of people dropped off, they gave up, they never returned. That's why you see all these finance channels and maybe 10, 20% of the people that are subscribed actually watch the channel anymore, because this huge amount of people that subscribed back in January, February have given up, they've quit, they're gone, they're nowhere to be found. And I don't want that to happen to you, because here's why. If you stick with it, and if you just fight and you carry on and you make it through 2022 and 2023, I guarantee you, you are going to learn so much and you're going to be so knowledgeable that come the next bull market in 2024, whenever that starts, you are going to have so much knowledge, you're just going to take off. I would take the next 2 years, 2022, 2023, and just spend as much time as I can learning. Just learn everything you can. Take courses, get coaching, just invest in the stock market, practice, get as much learning as you can in. Because when the next bull market runs, you're going to have so much knowledge, you're going to be able to put it all together, and you are going to make a killing. I mean, you could easily become a millionaire within a few years if you can just make it through the next 2 years. So fight, make it through the hard times, don't give up. And I'm telling you, you're going to make a killing once the interest rates stop rising, once we get back to normal, once the economy gets strong again, we are going to make a killing. So in that regard, I will be putting out some courses next year, a lot free, some paid, and I'm just going to be giving as much education as I can to help you guys out. We're also going to have coaching that's going to be launching in January. So I'm really going to go all out trying to help you get as much education, as much information as I can. Okay, all of that said, let's get into our stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Every day, I spend hours and hours and hours watching all kinds of different finance channels and analysts, and then I consolidate all of their stock picks into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about it, and then go watch their video to get the full details of what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page. And if you're watching on YouTube, click the bell icon and click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock and crypto picks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. Also, if you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. All right, let's get into today's stock and crypto picks. And first up is SHIB. This is Shiba Inu. So for the past 2 weeks, I've been telling you that I expected a breakout in SHIB as it approached the end of its consolidation. And now that SHIB has ended its consolidation, we can see that SHIB is continuing downward. So at this point, it looks like SHIB will fall down to the 200-day EMA at 4 zeros and a 2.5. By the way, that would also line up with the prior resistance level back in October. Now, longer term, Keen & Grace let us know that SHIB developers were working on the Shibarium blockchain. That means SHIB will be hosted on its own blockchain rather than on the Ethereum network. The blockchain is still in the works, and it will probably take months, if not years, to be released. The goal of the Shibarium blockchain will be to reduce the transaction fees, which are currently quite high on the Ethereum blockchain. Keen & Grace also let us know that the SHIB burn rate is going to double over the next 60 days, which will lower the supply and in turn increase the value of each coin. And now onto our stock picks, and first up is AMC. This is AMC Movie Theaters. AMC ran up over 19% on Friday. Surprisingly, that still wasn't enough to confirm a rebound. Now, if AMC continues to rise this week, we can get a golden cross on the RSI, then we'll have confirmation of a rebound. But I'm concerned about the hard bounce off of the 21-day EMA that we saw on Friday. I really hope AMC continues to rise this week because that would be confirmation of a rebound, but there's just no telling how high it will go if it does. Now, AMC would be on a new bull run, but if AMC drops on Monday, and especially if it closes below the 300-day EMA at $27.14, then that would be a rejection, and I would expect AMC to continue falling. So we'll just have to wait and see. There's really no telling what AMC is going to do yet. And next up is DKNG. This is DraftKings, and they're an online sports betting company. Chris Sain said DKNG has a lot more upside potential due to the fact that major acquisitions are coming. Now, some analysts on CNBC predicted that DKNG would buy out some smaller players next year. Now, that is actually not good for DKNG in the short term and can actually cause the price to go down. The reason is because DKNG will most likely have to pay a premium to buy the other companies, which will put short-term downward pressure on the share price as any acquisitions they make will eat into their cash and could significantly increase their debt or cause DKNG to do more share offerings. Now, I will also tell you that in the short term, DKNG is technically a falling knife. Not only is DKNG now trading below all major support levels, it also just formed a death cross on the MACD. So I'm personally just going to stay away from DKNG until it bottoms out. And the last stock we're going to talk about is NIO. This is NIO, and they're a Chinese EV manufacturer. Numerous YouTubers gave their thoughts on NIO Day. On NIO Day, NIO unveiled their ET5 mid-size sedan. This is their fifth model from NIO, and the ET5 will compete against the Tesla Model S. The ET5 is around the same price as the Model 3 and with a significantly better battery than the Model S. NIO also announced an upgrade to the ET7 battery that will now go over 600 miles on a single charge. Now, the ET5 won't release until 2023, so this really isn't going to affect NIO's bottom line anytime soon, and even the ET7 doesn't come out till next year. On a side note, NIO also announced that they were working on developing some augmented reality glasses that would provide drivers with information about the vehicle and would reduce the need for in-vehicle screens and also allow the drivers to see what was going on even if their eyes weren't on the road. But ZipTrader said that the glasses seemed kind of gimmicky. And regarding global expansion, NIO is currently expanding to a number of European markets, and by 2025, NIO plans to sell their vehicles in 25 countries, including the United States. Although, Stockmo did warn that global expansion will require a lot of capital, so there could be more share offerings on the horizon, which would cause downward pressure on the share price. Now the question is, will NIO rise on Monday or fall? I want to let you know that despite the fact that the futures are down right now, individual stocks can rise or fall regardless of what the overall market is doing. So even if Monday is a down day overall, NIO could still rise in price. Now psychologically, Larry Jones said a lot of people are expecting NIO to run up, and we actually saw a 2% gain after hours on Friday in anticipation of that. So there is some evidence of speculative buyers willing to prop up the price of NIO. Now technically, I will let you know the NIO is a falling knife, but it is near oversold in the RSI, which could be a sign of NIO having bottomed out on Friday. Unfortunately, the technicals don't really give us any clear direction on which way NIO will go. Now personally, I'm going to continue to stay away from Chinese stocks for now. China is still destroying their economy in favor of social programs, and that could cause continued downward pressure on all Chinese stocks overall for the next few months or even years. Zip Trader said that regardless of what happens on Monday, in order for NIO to see a prolonged rise, we'll need to see a change in sentiment for the entire EV market as a whole and for Chinese stocks as a whole. Larry Jones also warned that if NIO rises on Monday, that some people might end up selling and cutting their losses, which could cause NIO to fall back down. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what you think is going to happen in 2022. And remember, if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. You only have 3 days left to sign up for Webull, deposit $100, and get 5 free stocks worth up to $8,300. 3 days left and then it's over, it's done. So use my link in the description below to sign up and get your 5 free stocks worth up to $8,300. Now, if you're not a U.S. resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. till 8 p.m. Eastern Time. I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.